All right, guys, so you're welcome to day 2 of the Beginners Bootcamp powered by 10Trade. This is a 4-day webinar, and in this 4-day, we want to deal with the fundamentals of Forex trading, all right? So we want to get you to a level whereby you know little to nothing about Forex, to a point where you have a good perspective of the market fundamentally. All right. And these 4 days would help you with the building blocks you need to be able to have a fantastic career as a Forex trader. Okay. So what did we do yesterday? Yesterday, we talked about what Forex is. We talked about the market participants. We talked about candlesticks. We talked about pips, about lot sizes, about Forex trading sessions. We talked briefly about the MetaTrader 5 platform. All right, we talked about Forex brokers. We talked about spreads. We talked about currency pairs. We talked about what we do in the market, buying and selling. All right, we talked about contracts for differences. All right, so yesterday was an amazing class. I recommend take your time to go through the recording if you can, so that you get up to speed properly. All right. So today, what we're going to do is very, very simple. Today, we're going to go through the MetaTrader 5 platform, and then we're going to do a practical on how to open and close trades. We'll talk about the different modes of opening orders. We'll talk about market execution. We'll also talk about pending orders and how to use pending orders. We're also going to talk about market structure today. Very, very important. That's the highlight of today's class, market structure. We're going to talk about support and resistance, and then we're going to talk about trends. All right, so we're going to do all of that today, and then tomorrow we are going to build on everything that we've done today. And then day 4, we're going to talk about risk management. We're going to talk about psychology. That is on Friday. All right. So let us start by doing this. So yesterday, I gave everybody that participated yesterday an assignment. We're supposed to create an account with 10Trade, which is the Forex broker. Okay. Also create create a 10Trade account, and we're supposed to create a demo account on 10Trade. All right, and then you're supposed to download MetaTrader 5 on your devices. Okay, so on your phones or on your PC. Joshua Onyeka, let me know if you have all of this checked out. All right. If you have an account with 10Trade, you've created your broker account with 10Trade. If you have created a demo account with 10Trade, or you have a live account with 10Trade, and then you've downloaded MT5 onto your device, please type in a yes in the chat box. Let me know if we're good to go, because you need it to move along with me in this class. Perfect, Joshua and Oyeka. Thank you so much. So that means we are good to go then. All right, so this is in the bag, right? So now, before we go into practicals, let us discuss some things that we are going to see when we take a look at the MT5 platform. All right. Now I'm going to talk about some concepts. All right. So let's talk about types of market orders, right? Types of market orders. So let's start from here. Okay. So when we are trading in the financial market, in the Forex market, remember, we're told that we perform two actions. It's either we are buying or we are selling. Okay. On your MT5 platform, the platform will ask you if you want to buy or sell. Now, there are modes that you can use to enter trades. All right. So there are two types of market orders. The first type of market order is called instant execution. All right. It's called instant or market execution. And then the second type of market order is called pending orders. It's called pending order. So let us define these things, right? So what do we mean by instant or market execution? So when you are using, the reason you use a market execution is if you want to enter a buy or sell order in real time. You want to enter that particular trade at current market price. All right, at current market price. So right now, this is AUD USD, and then the exchange rates right now is on 0.67652. If you are trading with instant execution, that means as soon as you hit buy or sell, right, you'll be placed into the market in real time, immediately. All right, so that is what instant is. It's a no-brainer. All right, so you are buying or selling a particular currency or commodity at the current market price. You'll be quoted into the market immediately at the current market price. Now, on the other hand, pending order is a type of market order in such a way that you are the one that will set the price at which you want to enter that particular trade for a buy or for a sell. All right, so right now, this is where price is. I'm going to put a marker there. Right now, this is where price is right now. Okay, somewhere here. Oops. Somewhere here, right? So if you are taking market execution, you are going to be entering market at this price. But for pending order, you can choose to enter the market at your own price. So you can choose to enter the market at this point, okay? Or you can choose to enter the market somewhere below, okay? Anywhere. So based on your analysis, you can enter the market at your own price. So that's why it's called a pending order. So when you use a pending order, that order is pending, waiting to be fulfilled. It will only be fulfilled when price goes up to where you set, right? Or price goes down to where you set. Okay, it's as simple as that. Is what pending order is. There are two different ways to enter the market. Now, pending order for you as a trader might come in very, very handy. Let's say if you are someone that's very, very busy and you don't have the time to be on your chart, okay, in real time, you can set a pending order for when price gets to your price, okay? Also, if you don't want to miss a particular trade, pending orders just helps you set your entry and exit without thinking about it so much. All right, so it makes your work easier. So different folks, some people don't use pending orders, some use it. Right, at the end of the day, your trading strategy would determine the types of market order that you use, either instant or pending. All right, so but it makes a lot of sense to know how to use both. Okay, so instant execution is a no-brainer. Right, so let's delve briefly into pending orders, right? Because we have different types of pending orders, right? So let's talk about pending orders real quick, and then I'll show you exactly how it works. All right. So for pending orders, right, we have something we'll call, you have the buy limit, you have the sell limit, all right, you have the buy stop, and then we have the sell stop. All right, so these are the four major. There are other ones, but these are the four that you'll be using. Okay, so you have buy limits, you have sell limits, you have buy stop, and then you have sell stop. Now, buy limit and sell limits are categorized as limit orders. Okay, these are limit orders, right? Meanwhile, buy stop and sell stop are stop orders. All right, so I'm going to explain the scenarios in which you use both types of orders right now. All right. This is the easiest way that I learned it without having to cram how to use pending orders. And I think that when you understand it this way, right, you know exactly how to apply it. So we've broken down pending orders into limit orders and stop orders. So for limit orders, you have buy limit and then sell limit. For stop orders, you have buy stop and then sell stop. So let's define limit orders and stop orders. What's a limit order? What's a stop order? So in a nutshell, when you think about limit orders, I need you to think about reversal. Okay, limit orders are reversal orders, reversal, right? And stop orders are continuation orders. Okay, continuation. Okay, so limit orders are reversal orders. And stop orders, continuation orders. Okay. Now, what is a scenario that we use these things? What do we mean by reversal? And then what do we mean by continuation? So let us break it down. And let's talk about buy limit and sell limit to buttress what we mean by reversal. Okay. So let's talk about buy limits. Buy limits. So a buy limit is a scenario whereby you want to enter a buy, but you want to enter a reversal buy. So let's say you have something, price is going like this. So you have a market scenario, price is possibly going like this. Okay. But prices, you are looking to buy. Okay. But you are waiting for price to reverse before you buy. Okay, right? For a buy limit, you want to buy, okay, but you are waiting for price to reverse before you buy. I think that's the easiest way I can explain this to you. Okay, you use a buy limit when you want to buy a particular pair, but you want to wait for the price to reverse before you buy. By reverse, I mean you want price to come down to a particular price and then you buy. It's similar. So once price reverses, maybe you've set your pending order, okay, to be somewhere here at this point here. Okay, at this price here. So once price gets here, touches this your order here, immediately, right, your buy limit is going to trigger, and then you'll be entered into the market for a buy. It's as simple as that. So in using a buy limit, you want price to reverse to your zone, your order price before taking a buy. All right, so you are entering on the reversal. That's why limit orders are reversal orders. Okay. For a sell limit is the direct opposite. All right. For a sell limit, you want to sell. That's why you're using a sell limit. But you're waiting for price to reverse before you sell. So this is a scenario where you use a sell limit. So let's say price is going down, okay, and you are looking to sell, but you want price, you're looking to sell somewhere here at this top here. But you're waiting for price to reverse. Once price should reverse, and then it gets to this particular and your entry that you've set, immediately, right, your sell order is going to trigger, and then you'll be put into the market for a sell. All right, you are selling on the reversal. Okay, once price reverses, you are selling. And that's why we use a sell limit. Okay, so this is the limit for that reversal. That's why we call it a limit order. Limit orders are reversal orders. So as you practice using these pending orders, you get used to it, and then you know exactly when to use them and then when not to use them. But I need you to just have a proper understanding of this first, and then we'll also take a look at an application shortly. Okay, so that is that about limit orders. There's nothing too fancy about it. All right, let's talk about stop orders. Okay, so stop orders, like we said, are continuation orders. All right, so you have buy stop, and then we have sell stop. So what market scenario would you use a buy stop? Buy stop are continuation, right? So you want to buy the continuation, okay? For buy stop, right, you want to buy the continuation of the move. All right, so if price is in an uptrend, or if price is in a bullish momentum, you want to enter a buy order to continue that move. So if you see that price is maybe, oops, hold on. If price is going up like so, maybe price is in an uptrend, and based on your analysis, you think that this bullish momentum is going to continue. Price will keep going up, right? What you can do, Tobi, Oyeyinka, you're welcome. So if price is in a bullish momentum like so, what you can do, if you want to continue buying at a particular price, you can use a buy stop. Okay, to maybe you can say if price should get to this zone here, so maybe based on your analysis, you feel that once price breaks this zone, the momentum will be higher. Okay, so it's based on your strategy. So price is here currently. So for a buy stop, if the move keep going up and then it gets to the price that you set, as soon as price touches your buy stop pending order here, right, the move, you'll be triggered into the market for a buy to continue that move. All right, that's why stop orders are continuation orders. You want to buy the continuation of the move. All right, so and then you are the one that will set the price in which you want to enter for the buy. Okay, so sell stop is just the opposite. All right, so let's do sell stop. So for sell stop, you want to sell the continuation of the move. All right, so you can have something like this. Price is going down. You have a bearish order flow like so. Price going down. And then based on your analysis, you feel that this bearish momentum is going to continue. And you want to enter that sell at a particular price. So maybe here is where you set your pending order. So when price gets to this place, you want to be triggered into the market for a sell. So if you put your sell stop here, once price keeps going down and then it hits this price, immediately your sell order is going to trigger, and then you'll be entered into this market for a sell. Okay, that is how pending orders work. So rather than waiting in real time for price to get here before you press your instant execution, you can set a pending order. So pending order actually helps you to get in at very, very good price based on your strategy. Okay, it helps you get into the market at a very, very good price because you are the one that will set the price in which you want to enter. All right, so sell stop dusted, done and dusted, buy stop done and dusted. All right, so we'll look at how to use it in the market in a bit. All right, so before we go into the MT5 platform, let us talk about two concepts: concept of stop loss and the concept of take profit. But before we do that, give me feedback in the chat box. Do you understand what we've said so far about instant execution and pending orders? If you understand, please give me a feedback in the chat box. Just type in yes if you understand. Okay, let me know if I'm carrying you along. All right. Perfect. Thank you for your feedback. I'm glad you're following. So let's talk about the concept of stop loss and take profit. What is stop loss and what is stop loss and what is take profit? Okay, so these are things that you'll be using in your day-to-day trading. Okay, so there are two major entries that you can make in the market, either a buy entry or a sell entry. So you are buying when price is going up, right? And then you are selling when price is going down. So let's say you buy here. So let me use this. So over here, you place a buy here. And why are you buying? You are buying at a low price, anticipating that price is going to go up, right? That's why you buy. So you bought here. But there are times that when you buy, price would not go your direction. You might have made a wrong analysis and then entered this trade. So instead of price to be going your direction, remember you are buying so that you're anticipating that price should go up so that you make your profit. All right. But at times that price wouldn't go up, price will keep going, will go against you. Now, as price is going against you, you are losing money. Okay. So in order not to lose the whole of your capital on one trade, that is where stop loss comes in. So stop loss helps you to minimize your loss. So when you set a stop loss is a particular price that you set, that when the market gets to this particular price, I want to be taken out of that trade in a loss. Okay, so when you set your stop loss, okay, it's a price. It's a price. When you set your stop loss price, when your trade goes against you and then gets to that point, you get here, immediately you'll be taken out of that trade in a loss. So that is a maximum, right, that you are going to lose. Stop loss, SL. Okay, so a stop loss minimizes your loss so that you don't lose all of your capital. So this is the maximum in which you are going to lose. Okay, but when price is going in your direction, okay, that's where take profit comes to play. So you can set a take profit zone so that when price gets to that place, immediately you'll be taken out of that trade in a profit. So here is your take profit. Take profit is what we call TP. All right, so stop loss is SL, take profit is TP. All right, so when you are taking an entry, a buy or sell entry, right, you can use stop loss and take profits to automatically exit that trade. So take profit and stop loss are exit points on your particular trade. Exits is your exit price. All right. Regardless, you can decide to use a stop loss or not. You can decide to use a take profit or not. You can close your trades manually as well in a profit or in a loss. We'll also take a look at that when we delve into practicals. All right. But I want to recommend that you don't joke with your stop loss. Okay. On every trade, try your possible best to always use a stop loss. Okay. Always use a stop loss. It's going to save you a whole lot of headache in the future. Okay. So this is how it's going to look like for a buy order. Now, for a sell scenario, you are trying to, so you're anticipating that price should go down. Okay, so the more price is going down for a sell, you are making money. All right, so this is the point where you entered for a sell. Over here, that's the price you enter for a sell. So you will make money when price is going your direction. But what if price doesn't go your direction? It's going against you. As price is going against you, right, you are losing money. And how do you stop the losses that you're making? The maximum loss that you can make, you use a stop loss to minimize your loss. Okay, so when you set a stop loss over here, for example, as soon as price gets to your stop loss price, immediately, right, that trade will be closed by MT5, by the broker. And then that's the maximum you are going to lose. Okay. This is your stop loss over here. And then talking about take profits, when price is going your direction, is going your way, you can set the price which you want to exit the trade. All right, so you can exit the trade in profit. Okay, that is your take profit right there. Okay, quite easy concept, right? As you practice, as you use these things, it will become second nature to you. All right, so let's go to the chart now and see how to use these things. All right, so I'm going to share my mobile I know that most of us are going to be trading on the mobile phone. So I'm going to use MT5 for mobile right now on your app. So let me stop sharing here. Okay, give me a second. All right, good. All done. Let me know if you can see my you can see the charts on the phone. Okay, hold on. The phone just logged out. Let me log back in on the phone, guys. Give me 1 second, guys. Let us log back in. I want to deal with the mobile phone right now. So, Onyeka, Tobi, Joshua, are you using MT5 on your phone or on your laptop? Okay, are you using MT5 on your phone or laptop? Give me feedback in the chat box. All right, so we are all using it on the phone. Perfect. So let me get this phone back up, and then I'll show you how to do everything on mobile phone. Okay, so let us share this again. All right, so this is your MT5. Okay, so this is how it's going to look like. For everybody that has downloaded the MT5, you have access to this once you log into your demo account or your live account. Right? How do you log in to your account? Once you download the app, right, you are going to see this. Okay, and at the very, very top on Android, this is an Android. At the very top on Android, you see this plus sign at the top, right? On iPhone, you see the new account option to add a new account. So I'm going to just click on the plus sign, and then you'll be asked to add the broker. So all you have to do in your case is to click on that search bar and then search for 10 trade. So when you click on 10 trade, it will bring out the 10 trade server. So select it. And then all you have to do is the login that you were given when you created the account, the login ID, and then the password is what you log in with. It's very, very, very simple. All right. So most of us, I'm sure we've done that. So I'm logged into my account right now. On your MT5, you have 5 major tabs. You have the quotes tab at the very bottom. You have the quotes tab. The quotes tab is where you have all the currency pairs available to you to trade. Now, by default, you are not going to see all of this here. All right. So by default, you see just a few pairs here, maybe 1 or 2 pairs, or even nothing at all. So you want to populate your quotes. How do you populate your quotes? At the very top, you see the plus sign, right? So click on the plus sign, and then it will give you different folders. You just click on the Forex folder. You see all the pairs that you can add. Okay, so let's say I want to add NZD JPY or NZD USD. I just simply tap on it. Okay. So when I tap on any pair here, it will be added to my all right. So you can see at the very bottom now, I have NZD JPY and NZD USD because I just added them. So that is how you populate the currency, your quotes. So I want to recommend that as you're listening to me, if you have your MT5 also handy, and then be doing it as I'm doing it as well. All right. So that's the quotes. Then you have the chart section. So the chart section is where you can do your analysis on your phone. All right. So this is where you can do an analysis on your phone. All right. It gives you the candlesticks. All right. So you can actually change the color of your candlesticks. All right. You can also rotate it and put it on landscape mode, as I've done. Okay. So landscape mode will give you a wider view of the market of price. All right. And for people that want to change the color of your charts, by default, you will not see, you might not see a black background. I'm not sure. And by default, you might not see a green and red candle. Right? You can change the colors to what suits you. How do you change the color? Right? Just simply tap on the screen. Right? When you tap on the screen, if you are on landscape, by the right-hand side, let me change to portrait mode. It's better I show you on portrait. So when you tap on the screen on portrait, you see this settings icon. Is that wheel icon? We are all used to the settings icon. So you want to click on it. So when you click on settings, at the very bottom, you see colors, right? Customize color scheme. So click on colors. This is where you set exactly how your chart will look like. The grid, the background, everything, the colors of the buy candles, the color of the bull and bear candles, rather. See, okay, so this is where you set everything. As you can see, mine is set to green, so you can change it to whatever color that suits you. All right, so you want to take your time and then play with all of that and arrive at a chart that you like. All right, so that is that. And the trades tab, I'll show you shortly, is where once you are in a buy or sell trade, you see all the ongoing trades. This is also where you manage your trades. All right, history tab. All right, so history tab is where you get a summary of all of the trades that you've opened in the last day or in the last 2 weeks or in the last 1 month. You can actually filter it by the time. Okay, so it will tell you how much profit you've made or not. So you can see on this particular account, the last time I opened a trade on this account was on Valentine's Day. You can see February 14. So we opened 3 trades, and then you can see we open and close 3 trades, and then we're in $17 profit over here. All right, so issue just gives you summary of how your trades went. And then the last one is the messages here. So this is just something on MT5. Okay, so you don't really need to bother yourself about this. All right, so now how do you open a trade? All right, so how do you open a trade on your MT5 platform? So based on the currency pair you want to trade, all right, you come to the quotes tab here. So let's say I want to open a trade on Euro USD. All right, so Euro USD is this one at the very top here. All right, this is Euro USD at the very top. All right, so how do you do it? You just click on it and hold on it for like 1 second. All right, or just simply tap on it. When you tap on it, it will bring out this option. The same thing would also happen for people using the iPhone as well. All right, so you want to click on new order. So click on new order. I think iPhone, you see trade. All right, so you want to click on new order on Android, and then on iPhone, you click on trade. All right, click on new order. All right, so when you click on new order, you'll be taken to this terminal here. So this is your trading terminal. So the first thing you see is market execution. All right, so if you want to enter the trade instantly, right, you will see market execution. So, or you can change it to your pending orders. As you can see, you have buy limit, sell limit, buy stop, and then sell stop. So let's start with normal market execution. On iPhone, you see it as instant execution, right? And at this very middle here, where you see this is 0.01 over here, this is where you set your lot size. Okay, that's your lot size. So by tomorrow or on Friday, we are going to talk about how to determine the lot size to use. All right, so we want to use a micro lot, 0.01. All right, so and then over here, you can see you are being asked for your stop loss and then your take profit. So stop loss is the one SL in red, take profit is TP in green. All right, so if you know your stop loss or your take profits, you just simply type in your stop loss price and then type in your take profit price. You can add your stop loss and take profits even after you've placed the trade. So you don't have to be in a hurry to put it instantly. Okay, so let's say you don't know it, or you've put it, it's fine. Anyone is fine. Then at the very bottom, you see sell by market and buy by market. So you would only do this after you've done your analysis. So we are skipping the step for analysis now. We are going to talk about that shortly once we start talking about market structure. All right, but I want to show you right now how to open and close a trade. Very, very simple. Again, you'd only do this after you've done your analysis. Okay, so so let's click on sell. For example, click on sell. You can see as soon as you click on sell, you can see it will take you to the trades tab, and that trades tab will give you a lowdown of your running trades and your balance, equity, and everything. Let's open another order, same Euro USD, new order, and let's use a pending order now. So let's do buy, for example. Okay, so we are buying. So let's do another one. So these two orders are market execution orders, right? Let's go back to quotes. I'm going to click on Euro USD, new order. You can change this to anyone you like. Okay, buy limits, sell limits, buy stop, sell stop, right? We already explained the scenario in which you want to use those orders, right? So if it's buy limit, select buy limit. So buy limit means you want price to reverse first before you buy. So let's go to the chart and see what price is. So this is Euro USD price. Look at where price is right now. If I want to buy, that means you want price to possibly retrace. So if I want price to come here, for example, and then once price gets to this zone, all right, once price gets to where that line is, which is 1.06291. I want to buy. Okay, so once price touches this place, I want to be entered into market for a buy based on analysis. So this is just random, guys. Don't take it seriously, those zones. So I'm just showing you how to use the pending order. So this is a buy limit. Remember, we explained it for buy limits. You want price to reverse before you enter for a buy. So 1.06291. Let's go back. So if you have to enter a buy limit, for example, so you want to change to buy limit, and then they'll ask you for the price. Okay, so 1.06291, is that it? 0691. Let me confirm that, guys. 1.06291. Yeah. 6291. Buy limit 1.0629. Oops. .0629. All right, good. So you want to ensure that you're putting in the right figures there. .06291. Yeah. So over here at the top, remember to always check your lot size. Very, very important. So you put your stop loss, you put your take profit, and then you click on place. Okay. So when you click on place, you can see it's a pending order, like so. Right. This pending order is not going to trigger until price gets to that particular zone. All right, where is the zone on the chart? Let's go back to the chart. Okay, this right here is the zone. So until price gets here, you can see your pending order, you have a buy limit in place right now. So until price comes down and gets to this price, that is when your order is going to trigger. Okay, so that's why it's called a pending order. All right, so let's do another example for a sell stop. Okay, so if you want to enter a sell stop on this particular currency pair, that means I want to enter a sell and I want to enter a sell with a continuation. So I can actually use the same price, because if I'm selling, I can say that, okay, based on my analysis, if price gets to where this line is, I want to be triggered into market for a sell. Okay, that's a sell stop. It's a continuation. So come to your codes, Euro USD, new order, change it to sell stop. You will ask for the price as well. All right, 1.06291. You put your stop loss, put your take profits, then you click on place. You can see immediately you have your orders there. So the trade tab will give you all your running trades and pending orders. This is also where you manage your trades. So talking about managing trades, you can close a trade, you can edit your stop loss, you can modify your stop loss, you can modify your take profits. Right? So let's say you want to modify your take profits and stop loss on a running trade, like so. So just hold on the trade for about 1 second. You see options to close position, modify position, or new order. So to modify your position, you want to click on modify position. All right. And you can see the option to put in a new stop loss. Okay, so this is a sell order. So your stop loss can be 1.0650. Sell at 1.06. So 1.05. Hold on. Let's go to the chart and get a good stop loss. So this is sell position. Okay, good. For a sell, this will be, let's use 1.07. Okay, 0.00. And then for take profit, you can have 1.065000. Okay. And then you click on modify. Once you click on modify, now when you go back to the chart, you see where your TP, you can see your TP. Let's change to landscape mode. You can see your TP. All right. You can also see your stop loss. Okay. If I change to a higher time frame, you see the stop loss. You can see stop loss at the very, you can see good. So where your take profit is and then where your stop loss is will be shown to you. So you can play with this and see how it works. That's why we said you should create a demo account, a practice account, so that you practice all of these things. All right. So that's the way you understand how to use all of these functions. So that's about modifying trade. You can also close the trade manually. All right. So how do you close the trade manually? Simply tap on running trade for about 1 second, click on close position. You can see at the very bottom, if you are in a loss, it will say close with loss. If you are in profit, it will say close with profit. So I can still withstand this loss. It's just less than 10 cents. Let's close with loss. So when you close with loss, you can see the trade is no longer there. It will go to your history. Okay, when you change it to today, you can see your history. All right. Let's close the buy order as well. You can see for the buy order, I'm in profit now. All right, close the profit. All right, when I go to my history, it's there. So I lost 7 cents. I made 7 cents. So I didn't make any money. So the profit is 0.00 for today. So history gives you a summary of how you did within a particular period of time. Okay. So for pending orders, you can also modify pending orders. You can change the price at which you set to enter the market. You can change the stop loss, take profit. You can also change anything on the chain there. So you can modify, right, or you can delete. So I'm just going to delete both orders since we didn't analyze before we put it. Okay. So that is that about orders. Temitope is raising his hand. Do you want to speak? Do you want me to unmute you? So unmute yourself and speak. Okay.
Good evening. Good evening, sir.
Good evening, Temitope.
Yes, sir. Please, I want to ask a question about leverage.
Leverage. Okay.
Yes. On 10 trade, I see that
Yes.
the leverage on 10 trade is 1 to 500.
Yes.
I don't know how they pronounce it. Maybe 1 semicolon 500. So
Okay.
if someone wants to open an account, as a beginner, like someone who
Yes.
haven't gotten a much experience on trading, what leverage can someone use as a beginner that it will not blow someone's account? Because I heard that leverage, a wrong choice of leverage can lead to your account being blown. So
Okay.
yes, I want to know much about this. I don't really know much about leverage. Please, can you explain about it?
Okay, Mr. Temitope, it's a very, very good question. I'll just talk. Can you hear me?
Yes.
Okay, it's a good question, but I'll just talk about it briefly and we'll go deep into it possibly on Friday. So regardless of the leverage that you use, you can blow accounts regardless. All right.
Okay.
So blowing accounts is not about leverage. So what leverage helps you do really is to give you leverage. Okay. So with a low leverage, you'll be able to, how do I do this and explain to you? Okay. Now, for a beginner, I would recommend you to use a maximum leverage of 1 to 100,
Okay,
right?
1 to 100.
1 to 100. So you will see the 1 to 100 there. So pretty much, if you use 1 to 100 leverage, that means the broker is matching every dollar that you have. The broker will match it with $100. So if you have $100, for example, that means
Yes.
in the market, you have a purchasing power of 100 times 100, which is $10,000. Okay, so that means you have a higher purchasing power than your $100. That means you can actually get involved in more trading opportunities in the market.
Even with $100 in the account, right?
Yes, based on your leverage. Now, if you use a leverage of 1 to 500, you'll be able to open more positions than you'll be able to do on 1 to 100. So what will determine the leverage that you use as a trader is your style of trading. If you are an aggressive trader and you like to take very, very high risk, you might need to use a higher leverage. For some people that like to max out their accounts, they'll need to use a high leverage. But if you are a trader that you want to be conservative, you want low risk, right? That means you use a lower leverage. But for a beginner, maximum you want to use is 1 to 100. You can use 1 to 50.
Let's assume that someone wants to start with like $100, like as a beginner. Maybe someone wants to open the account. Maybe someone wants to deposit $100 for start. What leverage can someone use for that?
Yes, I just talked about this, right? Depends on you. As a beginner, stick to 1 to 100 max.
Okay, but can someone change it later? Can someone modify it?
Yes, you can at any point in time.
Okay, thank you very much. Understood.
All right, you're welcome.
Thank you. All right.
Yeah. Okay, so thanks for your question, Tim Chokwe. We'll talk about leverage tomorrow or Friday. Okay. Now, we were talking about how to use the MT5 platform. Now you know how to open and close a trade. You know how to use the quotes tab here, how to add currency pairs. All right. Now, what you don't know how to use is the chart right now. So the chart talks about making sense of these buy and sell candles. Okay, how to make sense of it. How do you analyze? How do you understand exactly what is going on here, right? How do you know the right price to buy? And how do you know the right price to sell? Okay, that is what we want to talk about now. Everybody with an MT5 installed on their phone would have access to what I'm seeing on my screen right now. Okay, so which will lead us to the next topic for tonight. Tonight, we are going to talk about market structure, right? The structure of the market. And then we'll talk about the most basic form of market structure. All right. And then tomorrow we are going to build on it and arrive at some sort of a strategy that you can use to enter the market for a buy or for a sell. All right, so I'm going to stop sharing this right now, and then I'm going to use my computer to show you this properly. Okay. So let's share the screen. So let's talk about market structure. And hold on. And talking about market structure, we're going to deal with two aspects for this beginners bootcamp. All right, market structure is the foundation of analysis, right? Is the foundation of analysis. If you want to analyze what is going on in the markets, you need to understand the structure of the markets. It is what you will do before you start looking at your entry strategy. Okay, so tonight, in the most basic form, we're going to look at two aspects. And then later on in our advanced classes, we'll look at deeper aspects of market structure. But tonight, we're going to talk about the concept of trends, market trends, right? And then we are going to talk about support and resistance. We're going to talk about support and resistance. Okay. So let's start from the concept of trends. All right, let's talk about trends real quick. So when we say trends, what are we talking about? Now, trends simply talks about the momentum in the market, right? So when you hear trend, I want you to think about the momentum of price. So when price is bullish, bullish means that price is going up, right? So we have bullish momentum, and then you have bearish momentum. So when you say the market is bullish, that means price is going up, is bullish. When you say the market is bearish, that means price is going down. All right. So using this bullish momentum and bearish momentum, when price is bullish, we say that the market is in an uptrend. Okay. When price is bullish, right, we say it is in an uptrend, right? When price is bearish, when the momentum of the market is bearish, we say that the market is in a downtrend. Okay, so we have two types of trends. We have uptrend, like so, and then we have downtrend. Right, so trends, again, we have uptrends, and then we have downtrend. So what is an uptrend? An uptrend is a market that has a bullish momentum. That means price is gaining strength, is going up, right? A downtrend is a market that has bearish momentum. Okay, so that means the price of that particular commodity is going down. You'll be seeing it visibly by with the candlesticks. All right, so the candlesticks will show us the trend of the market. So I'll show you how everything looks shortly, but let's talk about the most basic form of a trend, and then we'll go deeper gradually so you understand the building blocks of what make up a trend. Right, so the most basic form of a trend will look like this. So let's talk about an uptrend for a start. Remember, we said that uptrend is when the market is in a bullish momentum. When price is going up, right? You say it's an uptrend. But an uptrend will never be a straight line going up like so, right? The market does not move like this all the time. It does not. For a trend, the market will not just keep going up, right? One single move up like this does not define a trend. A trend looks like a zigzag. So for an uptrend, in the most basic form, it looks like this, okay? You have this move, you have this move, and then you have this move, like so. All right. So this is what an uptrend look like. So you have three moves here. The first move in a trend is called the impulse. It's called the impulse. Let me use different colors for them. It's called the impulse. Okay. Let's use colors like this. All right, so the first move, you can see this white line, this white move up. The first bullish momentum up is called impulse, and it's usually going to be a very strong and sharp move. It's called impulse, the impulse move. And then the second move, you can see the move downward, is called the correction. Okay, it's called the correction, or some people call it retracement, right? Some call it pullback. All right, so correction, retracement, or pullback is that red move, that red arrow is a move that goes down. Okay, the right word for it is correction because it is a corrective move. Okay, correction. And then the next move is another impulse move, like so. This is another impulse move. So a trend is made up of an impulse move, a corrective move, and then another impulse. All right, so a trend in its most basic form is an impulse move, a correction impulse. So impulse, correction, impulse. And then you can keep having a continuation of that move. So impulse, correction, impulse, right? Correction, impulse, like so. So a trend can keep going up like so. So this is an uptrend. Okay. On the flip side, the downtrend is just the direct opposite. Price is losing momentum. Price in a bearish momentum. So for a downtrend, we have an impulse move. You have a correction, and then you have another impulse. Right? You have a correction, you have impulse, correction, impulse. Okay, simple as ABC. If it is not clear, please let me know in the chat box, and then I'll do my best to reiterate. Okay, so, but just know that a trend is made up of impulse move, correction, and impulse. When price is gaining momentum upward like this, is called an uptrend. This is how an uptrend looks like. When price is losing momentum like this, this is called a downtrend. That means price is bearish. Okay, the price is dropping. Downtrend. Okay, again, a trend is what? An uptrend or a downtrend. So let's go deeper into our understanding of trend. Okay, let's go deeper. Let's use a microscope and see it on another level. Okay, so we have this impulse, correction, impulse. All right, so this is an uptrend, isn't it? Now, let's label this starting point and ending point here. The first part of an uptrend is called the higher low. Higher low. It's called the higher low. Okay, HL. Okay. And then the second is this one at the top here. The end of that first impulse move is called the higher high. Please write this down if you are following me, or just take a screenshot. It's called a higher high. And then the end of the correction, right, is higher low. When price breaks this previous higher high, okay, that is a new higher high. All right, so an uptrend is made up of higher lows and higher highs. When price keeps creating higher lows, like so, to create a new higher high, okay, that's how you know that an uptrend is continuing in its bullish momentum. All right, so price can retrace again, can correct to form a higher low and then form a higher high. When price keeps creating new higher highs, when an uptrend keeps creating new highs, we say that the market is continuing in that uptrend. That means the momentum is very, very bullish. All right, so this is higher low, like so, higher high, higher high. All right, so these are terms that you need to learn, all right, because we look at the market now and then we spot all of those things, all right, because you need to be able to interpret market structure. All right, so why are we learning all of these things? Why are we learning what an uptrend is and what a downtrend is? Remember, I said yesterday that what you are involved in as a Forex trader, the only thing you'll be doing to make money is to buy and sell, is to click on that buy button or sell button on your MT5. So the skill sets that you are learning is how to know when to buy and when to sell. That's all. When to buy and when to sell. All right. Now, why are we teaching you what an uptrend is? Because when you identify that price is in an uptrend, it is recommended that you only look for buy opportunities. Okay, write it down, guys. When price is in an uptrend, you want to be looking for buy opportunities, right? When price is in an uptrend, you want to look for buy opportunities. And where will you be looking for buy opportunities? You'll be looking to buy at higher lows. So in an uptrend, you are buying at higher lows. Please write it down. It's a very, very important gem that we are dropping. Okay, you will need it in the next few sessions. All right. When price is in an uptrend, you want to be looking for buy opportunities. And at what point are you looking to buy? You want to buy at higher lows. Okay, so you wait for price to make a correction first before you buy. Okay, so that is why we are first of all spotting the market structure, identifying what is a trend of the market. It is because you want to know the direction in which you should be trading. If price is in an uptrend, you want to be looking for buy opportunities, right? And on the flip side, if price is on a downtrend, you want to be looking for what? Sell opportunities, all right? So a downtrend will look like this, okay? Let's break down the details of a downtrend. It looks like this, right? The first part of a downtrend is called the lower high. Lower high, LH, right? Over here. That's the start of the impulse move. And then the end of that impulse move, that first one, is called the lower low. Lower low right here. Okay. And then this is lower high and lower low right here. Okay. So this is how a downtrend looks like in its most basic form. Are we together, guys? Let me know if you understand this so far. Type in a yes in the chat box if you understand what I'm saying so far. Right. Perfect. Tobi, thank you. Joshua, thank you. Now, in a downtrend, we can have a continuation. We can keep having a correction to form a lower high and price going down to break the previous low to create a lower low. Okay. In a downtrend, when new lower lows are being formed, that means price is continuing in that downtrend. Right? You can have price correcting like so, creating new lower lows, right? So when you see that price is creating new lower lows, right, that's an establishment that price is continuing in the downtrend. Okay. And like we said, in a downtrend, you want to be looking for what? For selling opportunities. You want to sell in a downtrend. And in a downtrend, at what point will you be selling? You want to be selling at lower highs. Lower highs is where you want to be selling. Okay. So you always want to wait for price to correct into a lower high, right, before you sell. Which begs the question, how do you know where a lower high is going to be for you to sell in a downtrend? In an uptrend, how do you know the higher low for you to buy? Okay, we're going to talk about that in the next topic of support and resistance. All right, so this is one aspect of market structure that you need to really understand. All right, so let's go briefly into the chart and then identify trend. Look at what price is doing currently. You see that price is in a downtrend right now on this time frame. I can see impulse, correction, right? Impulse, correction, right? Impulse, correction, impulse, correction. You can see price is creating lower lows and lower highs, like so. Okay, lower low, lower highs, All right, lower low here, lower high here. All right, so price is giving us new lows, new lower lows rather. Okay, and then right now price is retracing, is correcting to form a lower high. All right, so in a downtrend like so, we only want to be looking for sell opportunities. Sell opportunities. All right, let's spot an uptrend real quick. You can see something here. You can see impulse correction, right? Impulse correction, impulse correction. Like this, you can see what price is doing. All right, so in an uptrend, what is price doing? Price is creating new highs. It's creating higher highs and higher lows, right? You can see higher high, higher high. You can see higher lows here. Okay, higher lows, higher lows. Okay, I'm just circle higher lows, higher lows, higher highs, higher highs, higher highs, higher highs. Okay, higher lows, higher lows. Okay, so when you spot that price is in an uptrend, you want to be looking for buying opportunities at higher lows, right? It's as simple as that. So in an uptrend, you're looking to buy, and in a downtrend, you are looking to sell. Tobi is asking, what is the best time set to get the best market analysis? Okay, don't worry. There's no we'll look into that shortly. There's no best time. It depends on your kind of person as a trader. You know, there are different kinds of traders. There are traders that are, so let me just talk about that real quick. Yeah, so we have three major types of traders. We have traders that are scalpers. That's scalpers. We have intraday traders, and then we have swing traders. So scalpers are traders that like to, you know, get in and out of the market very, very quick. They are not ready to hold a trade for a very long time. Okay, so an average scalper is in a trade for, you know, a few minutes, let's say between 5 to 30 minutes. They know if they've made a profit or not. Okay, so a scalper is taking entry on the, let's say, 1 minute time frame or 5 minute time frame. Okay, please give me a second. Okay, so scalpers like to be in and out of the market, so they are trading on these particular time frames. An intraday trader is willing to hold a trade within the day, okay, a few hours in a day, okay, 1 or 2 days max. So an intraday is taking entry on, let's say, the 15 minutes time frame, and let's say maximum 1 hour time frame. Okay, so they can hold a trade for a few hours in a day. A swing trader is a trader that likes to hold trades for longer period of time. So an average swing trader is holding trades for days or even a few 2 or 3 weeks. So an average swing trader takes entry on the 4-hour time frame. Okay, so this is talking about entry time frame. Okay, so as you go along, entry time frame, there's something that you will learn called multi-time frame analysis, so that you won't be only looking at looking at the market from one time frame, right? You check out what's going on the daily time frame, on the 4 hours, on the 30 minutes before you go to your entry time frame. Okay, so we'll talk about all of that. So the time frame that you will use to do any of those things would depend on the kind of trader that you will be or that you are. Okay, are you a swing trader? Do you feel comfortable taking a trade and holding for several weeks or several days? And that also depend on what you are doing currently. For example, busy people, let's say you are already working, you have a day job, you go to work every morning, you might not be able to be a scalper or an intraday trader because you will not have the time to check the charts, let's say every hour or every 15 minutes. So someone that's very, very busy with their business or with their day job will most likely prefer being a swing trader. So you can easily mix your trading with the work that you are doing. All right. So for someone that has a bit of flexibility with their day, they can choose to be an intraday trader. Okay. So you trade using these parameters, or someone that is, that has ample time or doing this full time can choose to be a scalper. All right. So there's no ideal time frame, Tobi. All right. It depends on your plan, and we'll go into all of that as we progress. Okay. Let's take it step by step. I hope that makes sense to you, Tobi. All right. So talking about uptrends and downtrends, what I'd like you to do, gentlemen, is gentlemen and ladies, I want you to go to any time, any currency pair, any time frame, and I need you to just identify trends. Uptrend, identify it, or a downtrend, identify it, and then mark it out with your arrows. Okay, your chart has arrows or anything to just mark. So that's the work that I want you to do between today and tomorrow. All right, so our class tomorrow, we are going to combine our knowledge of trends and support and resistance tomorrow. All right, so please, and this wouldn't take you more than 30 minutes to an hour, so when you have the time tonight, maybe before you sleep, or tomorrow morning when you have the time, please do the assignment. It will help you follow along a bit better tomorrow when we start looking at the markets and trying to see what happened based on the trend in the market. All right, so this is AUD USD. Go to different pairs. We already talked about the different currency pairs available to you to trade. So go to any currency pair, go to any time frame, and I just need you to identify trends, uptrends, downtrend. Get used to it so that you understand what we're doing. But as you can see, all of this is a downtrend. Okay. As you can see here, all of this is an uptrend, right? So price, the market moves from an uptrend to a downtrend. Okay, so the market will not be in a downtrend for life. The market will not also be in an uptrend for life. So price moves that way. It changes momentum. Sometimes it will be bearish, sometimes it will be bullish. All right. Good. So that is trends. Please do the assignments. When you do it tomorrow, if you have any questions, I'll be here to also answer your questions and clarify for you. All right, I'll clarify for you. So let me just quickly give us something. Remember, I was saying that price moves from bearish from uptrend to downtrend and vice versa. So let's say price is doing this, is in a downtrend. Like so, at what point will the trend change from a downtrend to an uptrend? Okay, it is when structure is broken. So the only time that this downtrend would possibly start changing to an uptrend is when price breaks structure, is when price breaks the lower high. This is lower high on this downtrend. All of this is lower high, right? As we've already established. Okay, so when price breaks lower high, like so, okay, and price retraces like so, and gives you this, all right? This is a change in momentum. So price has changed from a downtrend to an uptrend like so, and then you can have something that'll keep going like so, okay? An uptrend can also change to a downtrend. How will an uptrend change to a downtrend? Is when momentum breaks structure. In this case, this higher low, it's a higher low. When this higher low gets broken like so, broken, you see a correction, and then you see a lower low form, okay? So the momentum has changed from an uptrend now to a downtrend, and that momentum can be sustained like so, okay? Or can be changed to an uptrend. So anything can happen with the market. So price, this is how price moves. Price moves from weak hands to strong hands. It moves from bearish to bullish, right? The market will do whatever it wants to do. But to take the best entry and setups, you want to figure out market structure. What is the trend of the market? Is the market in a bullish momentum, or is the market in a bearish momentum? If the market is in a bullish momentum, you want to be looking for buy opportunity. If market is in a bearish momentum, you are looking for a selling opportunity. It's as simple as that. That is the whole goal of understanding market structure. Okay, so let's talk about support and resistance, and I will call it a night. Tomorrow's session, we are going to merge our knowledge of support and resistance and trends together to give us a perspective of the market. Okay, so you don't want to miss tomorrow's session, guys. So let's talk very, very briefly about the concept of support and resistance. Very, very interesting and important concept. All right. So when you hear support and resistance, I want you to think about, of course, it's market structure. I want you to think about reversal zones in the market. Okay, think about reversal zones. Think about reversal zones. Think about, yeah, reversal zones or areas of reversal. You cannot miss it. Areas of reversal in the market. All right. And simply support and resistance is, we are simply using historical data to predict what will happen in the future. Okay. We are using historical data to predict what is going to happen in the future. Okay, so let's dive into what support is and then what resistance is to give us a better perspective of what we're talking about. So let's start with support. Okay, so please know that a support is an area of the market that acts as a floor. Okay. A support is an area of the market that acts as a floor. just like the floor you are on right now, when you throw a ball down to your floor, maybe on your tiles, most likely it's going to bounce back up because that support is strong, right? It is serving as a floor. The only time that something will break your floor is possibly if your floor is not strong enough, maybe it's not made with concrete, or what you are throwing on the floor is very, very strong. Maybe you are throwing something like a concrete or like iron that can break your floor. It's going to go past your floor. All right. So look at the support as a floor, such that when price gets to a particular point, we always tend to see a reversal. So this is what I'm talking about. So a support is something like this. Is an area in the market that acts as a floor. So support. So when you see that price came somewhere, so price is coming from, up like this, and then suddenly you see a reversal, a change in direction. All right. What is responsible for that change direction is a support. It's a reversal area in the market. And then, like I said, the reason why we are studying support and resistance is because we are trying to use historical data to predict what will happen in the future. So when you are identifying a support and resistance zone, it has already happened. You are looking at what has already happened in the market. So based on what you've seen, you've seen that price reacted somewhere at this support. So what that means is that if over here price reacted, then possibly in the future, if price should come back here in the future, because in the past, this area bounced price up. Possibly in the future, if price should come back inside this zone, we might possibly also see a move to the upside. Possibly. We are just speculating here. That is why we're identifying support zone. It's giving us an idea of what price will do in that particular zone. Okay, we are trying to use historical data to predict the future. Okay, and history is not 100% accurate, but I bet you history is accurate over 50%. That means when something happens in the past several times, most likely is bound to happen in the future. Okay, let me give you a typical example. The just concluded elections. Okay, congrats to the president-elect, Ashwati Bola Ahmed Tinubu. This man told us categorically that he was responsible for putting Buhari on the seat. Okay, he has done it in the past, history. And he was so confident that if he had done it for somebody, that means he can obviously do it for himself. So, and then you can see history repeated itself in front of our eyes. So if it happened in the past, most likely it can also happen in the future. Okay, that's the ideology behind support and resistance. Okay, so let's move forward because of time. We'll be out of here in the next 10-15 minutes. Okay, now let's go back to support and let's go a bit deeper. Now let us do all of this. So price did this, and then you identified this zone as a support zone. All right, such that you are anticipating that if price should come back into the zone, right, price might possibly go up again. But before you do that, you also want to validate this zone right here. You want to validate it to know if, okay, truthfully, we should be expecting reaction here. All right. So let me say this very quickly. When you identify a support zone, because support zone is responsible for pushing price up, okay, a support zone initiates a reversal. That means we want to be looking for buys. You want to be buying in a support zone, and you want to be selling in a resistance. So a support is an area of the market where you want to be buying. You want to look for buy, because a support will give you a low point to buy. Am I communicating, this gentleman and lady? Tobi, Onyeka, Joshua, do you understand? Let me know if you do. If you don't, let me know as well. Okay. Now, you want to be buying at support, and you want to also validate if you should buy at a support. How do you validate a support, right? The easiest way to validate a support is to look for 2 touches of that support. So this is 1 touch of the support. 2 touches is waiting for price to come back into that support. If price should come back into that support, and then you see another reaction in that support, okay? This is the first touch. This is the second touch, okay? So this is a validation. So this has validated this particular support. That means at the 3rd touch, right? At the third touch, you can start looking for opportunity to buy inside this zone. I must say, guys, categorically, that support and resistance is not a trading strategy. It's not an entry strategy, right? When price gets to a support zone or resistance zone, you still need to add further confirmation, look for additional confluence before you take an entry. All of that we'll talk about in time, right? So what support and resistance helps you identify are the zones where we should be expecting price movement, or are the zones where you should be trading from, are the zones where you should be buying or selling. But in order for you to take entry in a support or resistance zone, you need further confirmation to get you in at a very, very good price, or not even get you in at all. All right, so confirmations, right? At least 2 touches. For some people, they wait for 3 touches, but you want a minimum of 2 touches. Then you take your entry at the 3rd touch. So over here, you want to look for opportunity to buy after you've confirmed and you've done your confluence. It's as simple as that. Now, on the flip side, a resistance is an area of the market that acts as a ceiling, okay? Just like your ceiling in your apartment right now, when you throw a ball all the way up, most likely it's going to come back down. Your ceiling will send that ball back down, okay? It's a resistance. The only time that the ball will go beyond your ceiling is if you throw that ball with a very, very strong force, or the substance of the ball is very, very strong, or possibly your ceiling is not very, very strong. Maybe you are using all those, what is it called? There's something it's called, not POP, all those other kind of ceilings that is not very, very strong, that can be broken. All right. So likewise, in the market, All right. A resistance is a reversal area in the market that sends price back down. Okay, so this is resistance. So you see that price is going up like so, and then suddenly you see a swift and sharp change in direction. You see a reversal. You cannot miss it. You see it. What is responsible for that reversal, right, is resistance. Okay, so price got to a resistance, and then that resistance pushed price back down. Okay, resistance and support zones are psychological levels in the market. They are psychological zones in the market. They are zones where buyers and sellers are very, very active. Okay, a resistance zone is a zone in the market where sellers are looking to sell. A support zone is a zone in the market where buyers are looking to buy, where you have active buyers. All right. So in a resistance zone is where you want to be looking for sell. So we buy at support, and then we sell at resistance. We buy at support and sell at resistance. Okay, but you also need to validate your resistance to know if you should be selling at a resistance, right? You validate with at least 2 touches of that resistance. So when price goes up like so, and it also bounces off that resistance, right? That is your validation. Okay, so it means that this resistance is doing what it's supposed to do. It is holding. So at the 3rd touch, when price goes back into that resistance, right, based on your confirmations, you want to be looking for sell entry. So you want to sell here. Again, resistance and support is not an entry strategy. It's just gives you an idea of the zone where you should be buying and selling. You still need additional confirmation, confluence, to get you into the trade at a very, very good price. All right. So let's look at the markets and we'll spot support and resistance real quick. So we'll end it here tonight. And by tomorrow, we would merge our knowledge of support, resistance, and trends. So once we merge it together, it will give us a good perspective of the market. You'll be able to understand all of these candlesticks a whole lot better and know the best zones to be buying from and selling from. All right. So let's look at this. So let's identify areas of resistance and areas of support real quick. So which areas serves as a ceiling over here? You can see over here, price came here, right? We saw, okay, bit of reversal here, reversal here, reversal, okay? So over here is a resistance zone, okay? And then all of this is a resistance zone. And then you can see price, first touch, second touch over, let me make this bigger, guys. Okay, so the first time that price came to this zone, you can see price pushed up here, and then you can see the swift and sharp move downward. Okay, look at the second touch, second time that price would enter that zone. Okay, it also acted as a resistance. So this first touch and second touch has given you that validation of this resistance zone. So the next time that price will go into the zone, you want to look for sells, right? And then you can see price came here and then ultimately went all the way down, right? The fourth time that price entered that zone, you can see it went up a bit, but ultimately it came, ultimately it went all the way down. Okay, let's find another resistance. So you find resistance everywhere. Over here, for example, this is the resistance zone. All right, so price came here, you saw the drop, first touch here, you can see second touch here, price came here, we dropped. At the third touch, you can see when price came here, third time, so you had validated this